Shares of Nvidia are down a little over 2% after news that Chinese company Huawei is developing an AI chip it believes can compete with Nvidia's H100. That's according to the Wall Street Journal. For a closer look at the chip sector, I want to bring in Brian Colello. He is Morningstar's equity strategist. Brian, great to speak with you this morning. Talk to me about this potential competition coming in from China, specifically Huawei here. To what extent is that a real headwind for Nvidia?
Oh, I think the headwind is in place, and I think it's pretty much game over for Nvidia in China. I think the ban of the H20 was probably the final straw of Nvidia being able to sell anything halfway decent into China, and I would expect that Huawei's products will probably be higher quality than the older products that Nvidia has been shipping, or the H20, if not today, then at some point in the near future. So I do think Nvidia's pretty much cut off, and I do think of Nvidia from here on out as much more of a developed market story. There's still plenty of growth in the US, Europe. So I'm much more focused on those markets at this point.
Brian, I had to check the transcript when I sat down in my new seat over here to make sure I heard you correctly. You are very bearish Nvidia China business, specifically off the back of this news. What do you think that initiates for Nvidia? Do you think they potentially spin off the China business at some point, or do you think they just cut their losses and invest in other markets?
Well, I think they already have a $5.5 billion write-off, and we'll hear from them more in late May. So, it's possible maybe there's something they will be shipping, but I think the restrictions have cut the materiality of the China business in steps, and I think this H20 cut and the $5.5 billion write-off is as close to the final straw as I could think of. I think they just walk away and focus on the U.S.
And talk to me
as long as they can. I mean, if the restrictions get lifted, Nvidia would love to be back there, but I just don't think the U.S. government will let them, quite frankly.
So then, what does that mean for American investors, especially as we do head towards those Nvidia earnings? Do you think that there's still a bull case for this name in the short term?
Absolutely. I think Nvidia is still selling everything they can make on the Grace Blackwell side. There's still tremendous growth from the hyperscalers, Google, Microsoft, et cetera. We're seeing few signs, if any, that they're really slowing spending in 2025. It seems like they're buying all the Blackwells they can for this year because of the performance improvements. And we're still skeptical that U.S. companies are going to slow down their AI investments, even with the recession. AI is the future. It is certainly a race right now. And we think that spending continues in the short term. So I think Nvidia is set up. And now China could be a hit. So maybe we do see less earnings growth this year, less revenue growth. Maybe even revenues down quarter over quarter because of the big China hit. We'll see on that. But everything else should be pretty good. And there's still a lot to be bullish about for the U.S. and AI in the future.
And just curious how you think about companies that announce U.S. investment plans. This morning, IBM becoming the latest with a $150 billion investment in the U.S. As you know, there's already a $500 billion proposed investment from Nvidia. Does that change how you feel about any of these stocks? Does it make you think, okay, well, maybe they'll get a carve out from the administration if they are playing ball with a domestic investment?
Yeah, so I do think that's the upside. So I think China has always been a risk, and if your prior question was about the short term and the hit to China. So that's the downside. I think that's why Nvidia has sold off. At least I think the risk reward is still good because of the upside that you're mentioning, all the investment that can still be done in the United States, thinking about Stargate and everything else. I also think from a, let's say, tariff side of thing in the U.S., that we're still in a race for AI. The U.S. wants to be in the lead in AI. So I think if Nvidia and its partners, these leading tech firms, were to come to the U.S. government and say, hey, we're being slowed down because of tariffs, I think those restrictions get replaced. So I would say Nvidia is really one of our top picks if you're looking for companies that have minimal tariff exposure from here. Again, I think the H20 cut already happened, but if you're looking from here on out, I think Nvidia is probably better off than some other chip makers in terms of future tariffs that might get hit on them.
So, Brian, let's end where we started on this Huawei news. Given that you are talking about how Nvidia is well positioned amid the tariff impact, they are cushioned to a degree. Do you think that this narrative that I've heard from a lot of other investors that China is going to start to outpace the U.S. when it comes to tech and specifically AI, is that narrative a little overblown in your view?
It's not overblown. I do think it's a risk. I mean, there is a very conscious decoupling of AI between the U.S. and China, and the U.S. restrictions have caused that. And I think from the start, the risk has always been, if you're cutting China off from U.S. products, Is China going to go off and do something else? What if they do something better than what the U.S. can do? So I think that risk is still there. I wouldn't say that the Huawei products right now today signal that China is clearly better in AI, but it does continue to raise eyebrows that China might catch up faster than the U.S. government thought, and this is the consequence. The consequence of those actions. I think Nvidia is still going to drive innovation. I think they're still best of breed in the U.S., and I think the U.S. will be leading. But China has every incentive in the world to keep up and to be organized, to focus on Huawei. Like they don't need to do it while satisfying investors, and that probably gives China at least a little bit of an advantage to keep close to the U.S. I think that's possible. Yes.
So is U.S. tech dominance at risk in your view?
I don't think so. I mean, again, you're looking at Microsoft, Meta, Google, Amazon. I think those companies will still be just fine in AI. The foundational models, most of them are still, if you think about OpenAI and Anthropic, are U.S.-based companies. So I still think you're going to get plenty of innovation on the AI front in the U.S., but China's probably going to be close. I mean, Huawei's doing some impressive work. DeepSeek was certainly an impressive foundational model. There's large internet companies in China. So, on a broader scale, China is certainly a rival to the U.S. economically and technology-wise, and AI is just another piece where they're going to be close.